What's up, YouTube? Alright, so today I'm going to be show you guys how I trade. Henceforth, I'm going to be posting all my technical analysis on my YouTube, how I trade and how to also trade and how to also make money with forex market. Right. So first of all, um I want to explain my strategy. My strategy is based off of liquidity and price action. So the first thing we want to do right now is we want to understand what is the direction of the market, if the market is bullish or bearish. And as you can see, the market is bullish. We have lower low, lower high, I mean. So we have higher low, higher high, higher low, higher high. Right. So now we're in a what? We're in a bullish trend. Now, why do you classify this as a bullish trend or as a valid bullish trend? Because first of all, we have this double bottom. Right. Double bottom. Remember, I'm on the 1 hour time frame. Change of character. That means the neckline has been broken. Right. So this is a value change. And this pullback, and the pullback was created. Which also had a bigger structure. So this validates what? A bullish trend. Now, in an uptrend is what we call protected highs and protected low, right? So if the market is on a bullish trend like this, the lowest parts are usually the ones protected. For any reason, the market doesn't have any reason to come back to this point and go below it. Sometimes the market can come to this point, grab liquidity and continue upward. But what markets might not do, or what it's not supposed to do, is to break below it. So once the market breaks below that, the bullish trend has been invalidated. Right, the bullish trend has been invalidated. That means you're no more on a bullish trend. You're now looking towards, buying, selling the pace. Do you guys understand? Right. So the first thing to do is understand the direction of the market. Now that we've understand the direction of the market, what we're going to do now is we're going to map out the what's protected low. And as you can see, the protected low is around this point. Where the protected low is. So now from this point, we are going to mark up from this point to this point. All right, the market is free to play. So this is what we call the internal structure. So right from the internal structure, we want to be looking for our strategy or our entry within this internal structure. You guys understand? We want to be looking for our entry within this internal structure. So we've gotten our trend, which is bullish. Our trend, which is bullish. Now the second thing we want to do, based off of my strategy. Strategy is the first thing we want to do is look at the trend of the market. Second thing we want to be in a session. But when we want to look for liquidity, first we want to look for reaction. Reaction of understand? So now we've gotten the what? We've gotten this. Check this. This object. Right, this object. What session are we? Looking at the time, this is 9:46 Nigeria time. London time is going to be 8:46. So We are 1 hour ahead of what? Um, London. So this we're in London session. And if you don't know how to understand, if you don't know how to if you don't know how to what's it called? Identify the session, you can go to this indicator right there and just type sessions. So what it's going to do, you can go to Luxago, click on Luxago. What it is going to do for you is it's going to mark out these sessions for you. So the hash box, as you can see, is Asian session. The blue box is London session. Then the red box is what? New York session. So as you can see, a blue box are creating. It's creating already. That means we are in London session. Oh, we are in another session. Second what? Second conference have been worked, have been marked. Right. So what is next thing we want to look for? We want to look for the what? The liquidity. Now what is liquidity? Liquidity are where people traders money is. For example, if someone counts this, as a change of character, as you can see, if a trader there will surely be a certain trader that will mistake this as change of character and want to continue buying the market from that point. So these efficiencies. And the trader is absolutely going to put a stop loss beneath this market and think for himself that this is a protected what? Protected that he wants to look for any risk over ratio. As you can see, what does the market did? The market went straight down and looked forward and it's a stop loss. Right now, the market first of all meant for a liquidity grab. Meant to take enter the market very, very quickly. Right, so that's all for the liquidity. Now, for you guys not understanding the X and the XS I'm trying out, X X to me means break of structure. Is what US. Then XX to me means change character. Nice. So anytime you see X, I'm talking about break of structure. Anytime you see X, that means change of character. Right? So now what we're going to look for now, we're going to go to the 1 hour time frame and map out some liquidity spots that the market might reject off. There's a liquidity point right there. Right, there's a liquidity point right there. And this is also a liquidity point. And this is a liquidity point. Or we can also want to count this as liquidity. But if the market drops up to this point, it's kind of going to be good. But we'll only wait for confirmation. Right, so these are the two liquidity to the downside. Remember, if a liquidity gets grabbed by the downside, let's say the market grab liquidity here, we're expecting market to move up. But if the market grab liquidity to the upside, let's say grabs liquidity now, I think market to fall. You guys understand? What are we expecting now? What we're expecting right now is expecting the market to grab its liquidity. Once the liquidity has been grabbed, we're going to move forward. Reaction off of the liquidity that has been grabbed. Right? And what is the reaction? The reaction that we're going to be looking at is we are going to go to the 3-minute time frame. 3-minute time frame to look for what call change of character. Right? We're going to look for we're looking for change of character. So you're waiting for the market to have change of character. And that means to move to the upside and we're going to enter from that point, and our stop loss is going to be beneath the previous liquidity that has been the ending of the candle. Going to be targeting the next previous high. Right. We're going to be looking for a reaction, and the reaction is going to be a change of character. The reaction is going to be what? A change of character. So we're going to be waiting for what? A change of character. Right. I'm waiting for what change of character. So as you can see, we are waiting for the market to react off of it. So if markets continue dropping, we are going to be targeting this liquidity. And if markets still continue dropping, technically we can also count this. Let's see how the market does. So these are the liquidity point. You do this zones are also liquidity, but those are those are very far, right? Market going there is going to be very, very far. We are going to target the nearest liquidity pool, which is this point and this point, right? And once we've gotten a liquidity sweep, which is this, we are going to confirm by waiting for the candle to be closed. It remains 7 minutes. Once 7 minutes have elapsed on the 1 hour time frame, we are going to wait if the market closes above. Let's see if this candle or this candlestick this candlestick close above, right? We can count it as a sweep, but we can only count it as a sweep. That is once we've seen a change of character on the lower time frame. If we haven't seen a change of character on the lower time frame, we won't be able to count it as a sweep. And for a perfect entry, probably the next candle be a bearish candle we get and continue to move to the upside and end up closing as a bullish candle. And we're going to see something like a week, market a week that will see this previous one right there. If you can see something like this, it's going to be a very, very good setup. It's going to be a plus setup. But if you don't see something like that, we can just take what is available and manage our risk. Right. So if you can see something like a bearish candle, moving as first, then end up closing at a bullish candle, but swept this previous liquidity again, this kind of liquidity, and end up buying from many points from there, and that one stop loss placed exactly like that liquidity, and I think profits can be anywhere we want to put it to get anywhere we think money. So once we get there, I'm going to show you guys where I'm going to put in my take profits. But for now, we are just waiting for the market to react off of this liquidity. Once it has been grabbed and we have seen reaction off of it, I'm going to go to the next conference. Right. So this is my trading plan. So we're going to wait. We have 5 more minutes, and once that has been elapsed, we are going to see if it's going to be a good trade or not. So today's Monday, and hopefully we start the week very, very good. Now, perspective has been changed. We are now on a downtrend. We are now on a downtrend. We are now on a downtrend. Now, because I said we're on a downtrend doesn't mean we are in an overall downtrend. It's just a retracement. Then I mean, it's just a retracement. And what we're going to do right now is we are going to say this is a liquidity grab by the market. Get what I mean? A liquidity grab, pending the time. It uses as a momentum. And this is a mini change of character, like the main part of it. And now what are we going to be looking at? What we're going to be looking at henceforth is we are going to be looking for trend of the market. We've done that. So we are only going to look for two things, which is going to be the liquidity and the reaction of the liquidity. So we are going to be looking for liquidity and the reaction of the liquidity. And this two is going to be now where can we see liquidity? for the sell side. So now we're going to be looking for the buy side liquidity, and we are going to be targeting this point as our take profit. One, take profit. Two is going to be here. Take profit two is going to be there. So if we do not have any liquidity graph before we get to this point, we just sit on our hands, like we just sit on our hands like this, be patient, because patience is what differentiates profitable traders and non-profitable traders. Right, you have to be patient enough. And 15 minutes, 5 minutes, looking for liquidity, you have to just be in 15 minutes. But I don't like being in 15 minutes sometimes. I love looking at my liquidity on my 1 hour. So we're going to be drawing mapping out liquidity points on the buy side. That means the reaction we'll be expecting the market reach here. Going to this point, we'll be expecting a reaction. But with my experience, right, and how long I've been in the market, I'm very sure market is just going to move like this. To this point. Right, now we're going to be looking for the sell side liquidity. I'm very sure markets might not even get to this point, but I think if market gets to this buy side liquidity is going to be pushing up to this point. TP1, TP2, and 4TP. But for now, we are looking for an opportunity, right, to look for a sell entry. You can use Fibonacci, to map out the demand zone. All I can see is one of the reasonable markets can do is come to this fair value gap and try to sell. But if the market comes to this fair value gap, I won't still sell it. I will only sell when I see a liquidity grab, then reaction of it to the downside. If I don't see that, I'm not going to take any movement. Right? I'm not going to take any movement or take any trade. I'm not going to participate in any kind of movement. So what I'm looking at now is looking for market to sweep this liquidity. The second liquidity to sweep this here. To sweep this. And once that has been swept, look for reaction. Once reaction has been seen, we target this as our TP1 and TP2. And we are going to be expecting a buy as a continuation. Go around me. Some traders might want to do break and retest. For break and retest people, alright, they're going to be doing something like this. They choose this one or this one. I don't know how to do it, but break and retest traders, maybe something like this. They may want to sell from this point now. For example, if you're a break and retest type of trader, you might want to sell it like this and stuff like that. And it's going to affect your RR, so you might end up coming out with what? 1 RR. What is not the point of risking? And you might not want to tighten your sell. So to avoid being swept. So it's just better you be patient enough. And if you miss an entry, fine and good, you wait for new accession. And if the new accession doesn't give entry, you wait tomorrow. Market is open 24/7 and it's not going to end anytime soon. So you just have to be patient. Because now I'm in pains because I lost phase 2 account which I was 3% up. It's so painful because of my psychology and my emotions. So painful. Very, very painful. And I've learned from that. That's what that matters. And we keep moving. So this YouTube is going to be like a journey for me. You guys are going to see every single trade I take, every trade I post, every signal I send to my Telegram channel. Right, you can join my Telegram channel using FX Trading Academy, or you can follow me on my social media accounts FXWG_. Right, and click subscribe to this channel so you can see more of this content on my YouTube page. Right, so in this channel, I'm going to be doing more of trade, lifestyle, vlog, stuff like that. I literally want to document my journey, and for real, I really want to document the journey by myself. individually, not showing anybody, but like, what is the point of this if I'm keeping it to myself? Let me share it to the world. And I think I stumbled on YouTube. I think YouTube is the best platform to document your journey. Right, so I'm going to be documenting my journey, every trade and every setup I take. And I'm sure for those who are willing to learn, you can learn from this and you know do something with it. You guys what I mean? And we are going to be having a lot of topics to say. And it's just going to be a very, very good journey. It's going to be a blissful journey and a very, very good one. But what I'm going to do now, I'm not going to take any trade at of this point. This London session will be done by 1 p.m. Nigeria time, or sorry, 2 p.m. Nigeria time. London is going to open 1 p.m. And I'm just going to do one thing and one thing only, and it is to set an alarm on this liquidity point, right? So if this alarm doesn't get triggered, I'm sorry, I'm not taking any trade. If it doesn't get triggered, I'm not taking any trade. But if it gets triggered, I'm going to be interested. That's when I'm going to open my chart, and that will be it. Right. So once I open my chart and I see reaction of it, then I'm going to move on to the next part, which is going to be reaction confirmation, trade placement, stop loss placements, take profit placements, and loss size scaling or calculation, and also about psychology. What should be going through your mind when you are entering a trade or when you are in a trade? This is a very, very key thing people don't talk about. So that's going to be it, guys. I've set an alarm. Once that has been done, let's see what the market has so far. But from my point of view, this is a bearish market. This is a little bit of a bearish market. Right. So and this is a good thing why it's not good to enter it's not good to enter the market when it hasn't been closed yet. For example, if you have entered from this point, you see there have been a drawdown. Now you'll be praying to God, well, don't let it hit my stop loss. And marketers don't even know you exist. Just giving us data and letting us react off of the data. So as a professional trader, you also have the plans, right? So this has been set. Hopefully it gets triggered. Once it gets triggered, I'm going to be interested again on GBP USD. Let's check Euro USD. Euro USD, same thing. You see Euro USD is approaching and Euro USD have a little bit of imbalance. Euro USD is also targeting this this liquidity point right there. And if it gives a reaction for this point, buy. If it doesn't give a reaction, keep holding to when it gives a reaction and then this liquidity going out. Hope you guys understand. So with that being said, I'm just gonna sit on my hands. So I think I'm gonna set liquidity. Let's set an alarm here. I'm just gonna wait as liquidity will be triggered. Just set an alarm here. Area is GBP is on the other side. We just have to wait and sit on our hands. So see you guys during New York session. So with the way market is playing out now, I think you might see an opportunity during New York session. Yeah, you might see an opportunity during New York session. The way market is playing out now. Alright guys. Remember we talked about the market moving from here to this liquidity point when we got in this. So this is New York session. This is 1:37 Nigeria time, and New York will soon be open in a few minutes time. Let us refresh and let's see. So Remember I said if we didn't have any liquidity grab, we're not going to take any trade till when it's going to hit our mapped out liquidity zone. So refreshing, let's see where the market has gone to. Alright, so the market has ticked. See, market dips just as analyzed. Right, it dipped just as analyzed. So it's unfortunate enough that we are not able to capitalize off of it because um our criteria wasn't met. Right, our criteria that was meant to be met was reaction off of the liquidity that has been grabbed. Right, so I don't. People count this as liquidity grab, but me, I don't see it as liquidity grab for me. For real, I don't see it as liquidity grab. And now it has gotten to the mapped out liquidity zone. Remember, we said this and this will be the mapped out, and I think it's still going. Market is still interested in other liquidity zones such as this, right? So, all this. So what we're going to do right now is we're going to be using the same approach, but now it's going to be it's going to be from the beginning, right? So we're going to clear this out, clear this. Also remove this down alert. Remove the alert. Let's remove this. This isn't a I can't count that as a valid. The character. No, we are not yet in New York session. New York session hasn't been open. New York session will be open in the next 20 minutes. Right, New York session will be open in the next 20 minutes. London will also be closed in the next 20 minutes. So, what do you want to be looking for right now? You want to be looking for buy opportunities right now. Right, let's check it. AUSD also. AUSD will also tank. If GBP will tank, USD will also tank. So now I want to be looking for buy, and remember all the mapped out on the market went to those points. You see, we map this out, the market went straight up to that point. Alright, so that will have been our take profit if we have seen an entry. I see we have seen an entry. I don't want to force an entry at this point in my learning career now. I don't want to force it. Right, I don't want to force it. I don't want to force it. Normally I will have entered right here, but no chance to even, no chance to even like, there's no chance to want to react off of it. And for the reason, well, at this point, I don't want to force it. It's a good trade, and I'm going to be counter trading it. And I'm going to be counter trading it. And technically, it's not really a counter trade. It's just going to be a continuation trade because approximately we are already in a bullish trend already. We're already in a bullish trend already. To just deep pullback, right? This is just a deep pullback, grabbing as much liquidity as it can grab to eat this take profits and this take profits this point, right? So what we're going to do is the same thing. We are going to look for we just have to clear this and start again. We've got the trend of the market. Having in the session, we have to wait for the next 20 minutes before we'll be able to take off the session, right? So I have to wait, and the session got up. If near session is open, we are going to look off for liquidity. Right, we're going to look for liquidity, and we're going to look for reaction after the liquidity that has been grabbed, then reaction confirmation, which is change of character, then we're going to start to place a trade. Well, for me, I think I'm going to go for a buy from this point onward. Right, I'll just wait for New York session to be open. Once New York session is open, we are going to be trading near session together. We're going to be trading near session together. Right, so 15 minutes, let's see. 15 minutes of funny. Let's see, funny. Alright, change your character will be around this point. Around this point, access, change of character will be around this point. I can't decide now. New session hasn't been opened. Right, so let's wait for new session to be opened. And for USD, we also going to be waiting for this coin to get close. As once it gets close above, okay, we can still like still wait. We want to grab this liquidity and see. So depending how satisfying the market grab the liquidity, if it is satisfied enough, it's going to reverse from this point back. Right, so just be patient. The next 15 minutes we are going to trade New York session. Right, but London session analysis played as analyzed, means as analyzed, but our setup wasn't my setup wasn't shown and I countered the market. Right, so there's what we call discipline. Um that's what we call discipline and um you know following your trading plan. Alright, so I'm going to pause this now and in the next 15 minutes we are going to come back. Alright, the next session is going to be opening in 10 minutes. Alright, it's going to be opening in 10 minutes. So what we're gonna do now? What do we wanna do now? What do we wanna do? Is in accession already? Alright, guys. Next session, we're gonna take this. Now we look for liquidity. Liquidity and be swept. Liquidity and be swept. Now what we're looking for is a change of character. Alright, so I'm waiting for this to have a change of character. Once it breaks above that point, so we'll be entering our first trade of the week, end of the day. Stop loss will be around 10 pips. Yeah, that point is okay. Then I'll take profits. We'll be looking for take profit in the 15-minute time frame. And it's going to be yeah. And okay. 1 hour. Yeah, okay. Those will be our three take profits. So CP1, CP2, CP3, and CP4. even though I don't like this place. But this is going to be my overall TP. And sample message look unrealistic, but when you know the movement of the market, uh, it's kind of realistic though. So right, this is perfect time to start calculating um your lot condition. Right, so our stop loss is going to be beneath this point, and that is 9.3 pip. I'm going to go to my FX book. My FX book. Right, we are trading GBP USD. The account size is $5,000. I'm risking 1%, and my stop loss peak is all right. Let's say it's 9. Oh, no, it's going fast. It, the way it's going fast, it's going to be around the stop loss is going to be this one. Yeah, let's say 7 pip. Yeah, 7 pip. 7 pip. Our lot size is going to be 0.71. That's if I want to open one position, but I don't want to open one position. I want to open 3 positions. So I'll be using 0.24 in each position. So each new position number I'll be taking is going to be 0.24, 0.24, 0.24. So now that I've broken above that point, all I'm going to do now is I'm just going to, send it to my Telegram channel. Right, send it to my Telegram channel. You should buy GBP USD. Buy GBP USD now. Stop loss. Draft time. Stop loss. Okay. What is my lot size? 0.24. I've entered first position. I've entered second position. I'm going to keep one position for retracement purpose. Stop loss is going to be 34829. It's 1.3529. Pips. Pips at 9 pips is that. Okay, 9 pips. 9 pips. Right, sent to the channel. The retracements have been. Let's see. I think I'm going to enter the last one. No. Let's see. I think I'm expecting a little bit of reverse. So to this point. Yeah. The reason is this is another block that wasn't respected. So probably I may have a retracement. I have my stop loss actually. Stop loss. If I now the thing is, but it's not about this thing. Why I kept this, I said it's three position I want to enter. I already entered two. Now the reason why I thought this two is for reversal purpose. If the market reverse immediately and hit my stop loss won't be up to 1%. It will be up to 1%. But now you have seen a reasonable move now that I'm in profit. The last position that I did not open, I'm going to open it. Like I'm going to add it to it. Then I'm going to add one more again to it. That will be when I'm already in profit. Right. So this last position, I'm thinking how the probability that the market is going to have a little bit of pullback to this point. This blue box right there. Right, but this is the next protected blue. Normally it's meant to be beneath this point, but I can just adjust my stop loss to this point for now. Right, let me adjust my stop loss to that point. That is a liquidity point 0.3. 6 undefined. Let me edit it in the channel. So for fixed X, first the profit is going to be there, second, third. So normally we should have adjusted it to this point, but let's see. Let's see how the market go. If the market did not reverse enough, I can just add it to it. I should add it to it now and just forget about it. If I add it to it now, I have to reduce it because I've extended my stop loss. Okay, I've extended my stop loss. So let me just add it to it, but I won't use 0.24, I'll use like 0.15 or thereabouts. 0.15. Yeah. The reason I reduced the lot size was because of extending my stop loss. You get what I mean? So now I had additional position. Alright, I'm at additional position. Let's start having so right now we are already moving in profits. So I'm at additional position. Right, so our first take profit is going to be here. Second take profit is going to be here. Third, the final take profit reach this point. Right. So what have we done? If we are to mark our plan, what have we marked? Right, we've seen liquidity grabbed, which is that. That has been checked. What else have we seen? We've seen reaction to change of character. That's also been checked. We've confirmed the reaction. Also been checked. We've placed trade. Also been checked. Stop loss placements, we've done that. Also been checked. Take profit placement, we've mapped out our take profit. Also been checked, and we've calculated our loss size. Now let's talk about the psychology part of the markets now. Now the psychology part of the market right now is now you have different options, right? The psychological part is going to kick in when markets start moving in your direction or against you. So now if I'm to lose this trade, I'm going to be losing 1%, $50, at most $60. Go and my name get to $50, but at most $60. Well, now that is it. I've accepted it now. Me looking at my balance in my head, I'm seeing negative $50. I've accepted the risks that okay, this is what I'm willing to lose. Like you get me. Before if you should stop loss now, it won't be hurt because I've already seen it before it comes. Right? I've seen it before it comes out. I've accepted it. So now I'm like $50. I've lost $50 already. Like this, I've seen this trade moving. I've lost $50. Even though the market moved down and it's stop loss, I've accepted the fact that I've lost $50 already. So if it happened, it's happening. But what I will be happy is okay, I followed my rules. You get why I followed my rules. That's what really matters. And so for now, I've accepted I've lost $50. I've lost $50. You get what I mean? So now, what am I going to do to maximize from this? Remember I said our take profit is going to be on, we're marking our take profit on the 15 minutes, right? We are going to be looking for a point in the market that this a red candle, liquidated the previous candle. For example, this one right here. This should have been the zone, but because we have 1 hour fair value gap, we are going to be using the 1 hour fair value gap. Okay. And it's also match. So we're going to be using the 1 hour fair value gap, which is this. Alright, so each time it hits our take profit, we are going to be adding another position. You get what I mean? I'm going to be adding another position. Alright, because now me adding another position means I'm aiming towards another what? TP. You get what I mean? So now it's already moving in profit already. Market has started moving in profit. And these are take profit 1, take profit 2, take profit 3, take profit 4. You have 4 take profits right now. So I might leave this to all physical. I might leave it to I don't know, to probably to West time. It is 2 to let's say 4 p.m. Nigeria time. And I just set alarm on every take profit. I think I'm using the free trading view. So usually 3. I think we have 1. Okay, we've gotten 3. Okay, I'm delete EURUSD. Or should we check EURUSD? I love taking 1 trade in a day. Oh, EURUSD has started moving also. Oh, EURUSD has started moving already. EURUSD has started moving already. And EURUSD, we are to enter right now. Stop loss will be beneath this. Oh no, beneath this. Yeah. So supposed to be being debt. Yeah, so for the UAZ is what we're gonna do. UAZ we've gotten the liquidity, we've gotten the liquidity already, and take profit is going to be the profit one is going to be here. For UAZ, take profit one is going to be here. Take profit two. Yep. I check 15 minutes. Now take profit two on that point. That's for 1 hour. Take profit three. That point and that, and also choose this also. Alright, so that's for every easy. So this for every easy and this for GBP easy. So what are we going to do now? We are just have accepted this. I'm down $50 on my brain already. So even though it's stop loss, I'm not even thinking about the profit now. I'm not thinking about the profit. I'm not thinking about the loss. I'm down $50. Fine and good. I want to lose $50. Like not I want to lose. Like I'm very willing to lose already. I've already minus it from my balance psychologically, and if it happened, I won't be hurt. I'll be like, I've seen this coming already. What you've seen coming is not going to hurt you than what you didn't see coming. Let's, for example, if you are not, you don't want to lose it, your risk limit is like say $5,000, and I'm going to risk $100,000 on one trade. Each movement of the candle is going to determine how fast your heart is going to beat. If it's against you, it's going to beat 3 times faster. It's, in your favor, your adrenaline is going to be like, I might end up closing too early. You get what I mean? You might end up closing too early, and that's going to cause a lot of pain to you. You're going to be like, I wish I can hold on to it. I wish it has happened. You get what I mean? So that's what I have to say about psychology. Cool parts of the trade. So 10 things to do in the trade. The stop loss statement, everything I've checked. And psychology was aspect also have been checked. So now this is the retrade. The retrade is everything that we checked right now. This is the retrade. Now this is just a reflection of this. You know what I mean? This is just a reflection of this. So normally, because you choose this spot, I don't like part of my psychological stuff. I don't like having this green stuff there. Like I like putting it in invisible. I don't like seeing it. Reason being is it's giving me this anxiety and this adrenaline pump. Yeah. Oh, I'm in profit. Oh, I'm down loss. To get what I mean. So I usually just clear it and I just let my strategy just work for itself. You get what I mean? So for the UPSD, if we are to continue on the downside, let's use the Fibonacci. Market should have retraced to market should have retraced to either of these 2 points. But I'm having a strong belief that the market is buying. So, and all my analysis on it has worked. You get what I mean? So, I'm just trusting my edge right now. You get what I'm not trusting my edge right now. So, we have a fair value gap right now. At 15 minutes, if it's close bullish, we might have a test from this point and most of the upside. Stuff like that. And there is this trade by SAR, I think this way trading ICC, or what does it call it? Indication, correction, continuation. Okay, so Market wanna stay bearish, broke above, stay bullish. So you can test, then move to the upside. With all being said, we'll be hoping the market gets to this point, previous high, and we'll move to the overall point, which is there. So I'm going to be adding a new position on every TP we hit. So nothing to regret. So what I do from this aspect, now that I've put in alarm on every take profit, I'll just wait for my alarm to ring. And I'm just going to go and do my normal day routine. Stop loss placement. Oh, I usually put alarm on my stop loss also. Yeah, put alarm on my stop loss. Then I put alarm on my stop loss. And that's one key thing. Alarm on my stop loss. Yeah. That's matters. Cool. So either my phone vibrates, either of these two things, stop loss or take profits on 8. Take profits on 8. That's one. CP2. So everything looking nice. Let's just see. Alright guys, this is my after. I've taken profit already. I took profits at this first TP. I think I'll leave the market to run out. I'm going for today. I made $100 with 1%, made 2%. Very good. And I took it out because of one reason and one reason only. This fair value gap right there. This fair value gap right there. This we have retracement into this zone, but it's going to tap it, and there's a chance it take the first liquidity, which might want to pull back. So my criteria wasn't like going the way I wanted to do, but it took the first liquidity, which was this, and I was up 2%, which was $100, risk $60 to make $100. That's okay. Capital secured, big 2 times of my risk. At least it's good. That is it. As you can see, this screenshot of it. The date also. And I also sent it to my Telegram channel, which is this. So, as you can see, by the periods now, stop loss and stuff like that. And I think I can now open the taper in the long position now. It should be this. So this in the video I made earlier on, right? I talked about stop loss placement. I didn't have to place my stop loss this point. It's like, okay, this was where I place my stop loss. That was why I had 2 hours. As you can see, the market is pulling back. Let me send some analysis to the channel. So you can see 0 drawdown. We didn't have any drawdown. 0 drawdown. Yep. Second section. Done for the day. Right, as you can see, the before by the periods now and the after the TP and the periods. same analysis, same entry, Dorani. Very cool, right? Very, very cool. So, and as you can see, as predicted, we have this massive bearish drop. So we can have a little bit of reversal, and let me see if I can see another what is it called, another entry. No, this is what I'm talking about now. This is a liquidity pool. Now market is going to drop big time this time. Yeah, it's going to drop because this is a liquidity sweep right here. This candle we are seeing right here with liquidity sweep. So this candle is this fall is going to be massive. This fall from here is what's going to be massive, and it might fall up to the point where this 15-minute fair value gap is, and I don't want to be floating in profit that much, and seeing it go down whenever I took profit to lyrics, liquidity, and this it's all about time. If I hadn't known the market would be to this point, I would have lose a lot of profits if you got a lot of floating profits. But based off of the experience I have acquired over the years, I know where to place my stop loss, I know where to place my take profit and stuff like that. And this is for today trade. I'm not going to trade again for today. You're going to give me another opportunity. I'm going to close my laptop now. Move on move on. We'll go on to something else. Maybe watch football, watch movie, be with family and friends. And guess as said, now you see the market is falling badly now. So imagine you're in profits up to this point and market starting stuff like this, you're going to be paying. And you won't know why because you don't know how the market works. You get what I mean? So that will be it for this video. I will see you guys tomorrow. I'll be doing this every day. Anytime I want to take a trade, I'm going to drop a video on how I trade, how I take a trade, and how I enter, how I get out. This is a video so that a lot of you people can be profitable and make money for your loved ones and make money for yourself and live a good life. So we stay over FX Energy. I'm going to see you guys in the next video. Do ways to like and subscribe this video. Catch you all soon.